Okay, next little part of the itemize is of course going to be some taxes that we're going to look over to basically show you other items that we can basically have deductible on Schedule A. But first thing I want to do is, because I forgot to kind of do it at the end of the last part, is that this is our Schedule A right here. So what I forgot to do is actually show you the parts right here for medical. So this is what will show up on Schedule A for medical. So using our prior example, at the end of the medical, we would have had right here medical deductions 5564. Enter amount from line 1040. This would have been their salary or AGI, and then 75, which would have been 2,340 and 324. This is where we would put the medical. Again, there's actually a worksheet that we would have that will help us total the medical and dental expenses, but we're not on this one anymore. We're going to be joining into now this part on taxes. So let's talk about taxes on the itemized list. Yay. We'll see what we can fill in here if we get another example. Just for, I don't know, maybe just for the halibut. Halibut, the good fish. Anyway, from the current slide, here we go. So, taxes are generally deductible. That's good to know. Fees are not deductible though. So taxes are imposed by a government to raise revenue for general public purposes. Fees are just charged with direct benefits for those paying the fees. Okay. Difference when we look at examples of deductible taxes on Schedule A. Big one is state, local, and foreign income tax. Okay. Sales tax in lieu of state and local income tax. Again, we can pick either one. Typically, when we get sales tax, especially here in the state of Texas, because we don't have a state tax. We got state, local, and foreign real property taxes. Basically, property taxes, that's all it is. Personal property taxes, usually on our vehicles. So, foreign property taxes only deductible if incurred in carrying on a business or for production of income, e.g. rental activity. Mostly for here, local, it's going to be your vehicle. Your vehicles, RV unit, if you have it, you probably will pay a personal property tax on it. So, this is the aggregate amount of deduction is $10,000. That's as much as we can take right now. This again came from the TCJA. Used to be we could pretty much take as much as we want. But it is $10,000. It is $5,000 though if married found separate for all the following: state and local property taxes, personal property taxes, state, local, and foreign income taxes, and sales tax. I'm kind of stuck there. If taxes are paid or accrued in carrying on a business or the production of income. Of course, the 10,000 aggregate limit rule does not apply to foreign income tax, state, local, and foreign real property taxes, and state, local, personal property taxes. That's if we're carrying on business. That, of course, will probably go on Schedule C or partnership, return, or one of those. We'll keep that with the business. When we look at itemized, we got a $10,000 limit. So, examples of non-deductible taxes. Again, people like to tax wherever they can. So, federal income tax is a no-no. Okay? You can't deduct it. You get a refund if you have enough withholded, but you can't deduct it. Only state. Employee portion of Social Security taxes. Estate, inherited, and gift taxes. Excess tax and gasoline taxes, except when business related. And foreign income tax if taxpayer elects a foreign tax credit. But all those are pretty much no-goes. In fact, a couple of those are actually their own actual tax forms. So, we're not going to have any of those being deducted. Again, the Schedule A is very clear and precise of what items can go on there. So, knowledge check. Which of the following is a deductible tax? We just went over them. So, is it the federal income tax, the state and local income tax, the state inherited and gift tax, or the employee portion of Social Security taxes? Again, pause real quick. Pick which one you want. I'll go right back into which one's the right answer. Okay, so if you pick B, you are correct. Only state and local income taxes are deductible. And we'll probably have an example of that going on. If not, it's okay. So, like I said, here it is. Why not? Income taxes and sales taxes. So taxpayers may elect to deduct either of those two. We can either take our state and local sell and use taxes, or two, we can take our state and local income tax. Now, since we are, again, state of Texas, we don't have a state local income tax. But again, our neighbors around our state pretty much do. So definitely Louisiana, Arkansas, Oklahoma, New Mexico, all they do. So quite a few states have state taxes. Now, for taxpayers that deduct state and local income tax paid during current year, deduction amount is total amount of state and local tax withheld from pay plus any amounts actually paid during the year, even if tax payments are from a prior year. Again, they take whatever is paid during the year. Okay. If a taxpayer receives refund of taxes deducted in prior year, refund must generally be included in gross income in year that the refund is received. That is true. We do get a refund, and that will show up on one of the schedules. Not your Schedule A, but I believe either Schedule 1 or Schedule 3. Taxes that do not provide any tax benefit in year paid are not required to be included in income in year received as refund. Okay. To calculate deductions for sales tax, taxpayers may either use actual sales tax paid or estimated sales tax from IRS table. Most people will do the estimated unless you actually do save every receipt that you had, or basically calculated your sales tax that you did pay to the state. I mean, you can. I got no problems with that, but again, we don't see that. But think about the big ticket items. Cars, boats, houses, all of them that have sales tax in the state, you can take the sales tax portion as an itemized. So here's our example. Told you we're going to have an example. Alright, so Colleen, I think it's Colleen, amends her 2017 state income tax return. Oh, got amended. Going on. And must pay an additional $843 state income tax in 2020. Okay? Of the $843 she owes, $93 is for penalties and interest. Colleen has $660 of state income tax withheld from her wages during 2020. During the year, she also paid quarterly estimate state income tax payments as follows: $200 each on April 15th, June 15th, and August 15th of the current year, and January 15th of the next year. Okay. 155 fourth quarter estimate from the prior year of January 15th of the current year. Based on this information, how much can Colleen take for taxes as an itemized deduction? Alright. So, we do know this. She's allowed to take any amounts that were actually paid in 2020, again limited to $10,000 on her Schedule A. We're okay. We're not going to hit $10,000. There's no way. She didn't pay that amount. But this is how we're going to calculate. So, again, let's break it down. First off, it does say that she paid $843 in this additional after amending. But $93 is a penalty. That's a fee. Okay? Penalty and interest, basically fees we can't take. So technically she only paid $750 for the actual tax. Okay? She also paid the $660, there we go, of state income tax withheld on her wages. So we know we have that. And then during the year, she did $200 on April 15th, $200 on June 15th, and $200 on August 15th. We do not take the January 15th of next year. That's next year, not the current year, or basically in 2020. But she did pay additional $155 on January 15th in the current year. So total deduction that she can take is $2,165. Again, be very careful of when the tax was paid. Okay? And make sure you always remove penalties and interest. Okay? So again, here's the solution right down here. Same thing that we did. They just basically lined it all out. But again, the key is that it has to be in the current year. Property taxes. Now these are of course taxes levied on state and local real property for general public welfare are deductible. Yes. If you own a house, I will say owning a house is a big chunk of an itemized item, because we're going to get into mortgage interest in just a sec. But property tax is one that you get to deduct. Now, there is non-deductible ones too. This is really a special assessment charged to provide benefits to local property owners. These amounts, of course, increase basis of taxpayers' property. Also, we cannot deduct service fees. And they put examples: garbage fees, homeowners association fees. Yes, your HOA you cannot take. Sorry. But if you have a rental property, you may. So, for real estate sold during the year, buyer and seller must allocate taxes based on number of days property was held. Okay? Allocation is generally made by escrow companies or closing agent, and allocation amounts are itemized on closing settlements for the sale. So again, here in the state of Texas, you can take the sales tax, if you have sales tax on the house, and you can also take property taxes that you would have to pay on the sale. Personal property taxes. Okay. To be deductible, personal property taxes must be levied based on property's value. Okay. Again, vehicles is on the property's value, but it's basically on weight, So taxes on a fixed amount are those calculated on basis other than value, such as weight. So again, vehicles, it's a different way, are not deductible. Again, portion of your registration does show taxes. We can take those. It's nice. Okay. Example here. We have Selma has AGI of 31,300 for 2020. She itemizes her deductions and therefore deducts the allowable amount of taxes. Federal income tax withheld for the year are 2,150. State income tax withheld are 1,500, and Social Security taxes are 1,768. Selma paid property taxes on her house of 3,300 for the year and paid garbage fees of 867. Wow, they're throwing in a lot of different items. She also paid an automobile registration fee of 210, of which 30 is based on weight of the automobile and the balance of the value of the automobile. How much may Selma show as itemized deduction for taxes in 2020? Okay, let's break this down. Whew. Alright. First part. First line, we have federal income tax, state income tax withheld, and Social Security taxes are so forth and so on. Well, right here, we know we don't take federal income taxes. We don't take Social Security tax. We can deduct state income tax. So we do have 1,500. Let's see what else we had. She did pay property taxes on her house for 3,300. Okay, but garbage fees do not count. Okay. So we're up to 4,800. Let's see about the last one. She did pay automobile registration fee of 210, but 30 of it was based on weight. We can't take the weight. So 210 minus 30 is 180, but add it to the rest shows that we have itemized taxes of 4,980. Okay, so Schedule A. Here's our Schedule A. And we're going to throw this example on here. I know it's from different people, but why not? Doesn't hurt. So taxes repaid. Again, state and local. We would have put the state tax here, which was the 1,500. Then our real estate taxes, property tax, that was 3,300. Here is our personal property, which was 180. Then it actually says add the lines together, which we already know is 4,980. And then we'll say enter the smaller of the two, of 5D or 10,000. Again, we're under the $10,000 limit. We don't have any other taxes. We're not going over that. That's a little bit higher. So right now we finish out with the last example of 4,980. Okay, so if this is one person, they would have a deduction of medical of 3,224, and now 4,980 to add to it. So I guess you can see where we're going to go to next in the next part. So PowerPoint. There is our solution from current slide, but that is about it. So we're going to conclude this right here. Again, a few taxes that we have that we can itemize, but just be careful which ones you can. Okay, watch out for the exceptions. Okay, so I will see y'all next time.